Traders, are you ready for the big volatile week ahead? Because we have US Federal Reserve, Bank of Canada, Bank of England and Bank of Japan. Four major central banks are coming up with their monetary policy. Now, how it is going to impact dollar and gold? Gold has rallied to all-time high 3675. Now, in this video, I'm going to cover the correlation between US bonds, US dollar and gold. And it is going to answer whether this golden rally will continue or it's time for the pullback. So let's begin our chart analysis, and this time I'm beginning with US 10Y. Now US 10Y chart is basically the graph for explaining the 10-year bond auction rate. So here the 10-year yields, basically the rate of interest on 10-year bonds, it's now dropping. And I'm going to explain the technical analysis. I'll start from the monthly here. And I'll plot the fib from the highest to the lowest. And we got the bullish divergence here between these two low points. So we have connected for the divergence. Now because of divergence, it created a bounce here and the rally stalls here. So I'll bring the vertical line on the lowest point and look for bullish extensions here. I need to start from the bottom, so we cannot connect here A, B and C because the cycle is not yet done. So I need to move down to weekly, and on the weekly frame I get to see here the bullish cycle. So I'll start from the lowest point as A, and we can connect with the high here and the lower high here. So A, B and C identified. So let's apply our extension here. So first fib extension applied. So it has a strong base fib extension support here at 3.361. The current rate is 4.06. And it has also created bearish divergence between the last two highs. So higher high found on the chart with bearish divergence, which means weakness. Now based on divergence, the breaker structure level is to be identified, and it's exactly on the fib line, which is not yet done. But if the breaker structure is not done, we can use alternative method of trend line. So I'm gonna connect the lowest with the BUS point here. So with the help of a trend line, and yes, the structure is broken. So basically the rising trend line is now compromised, and I can see here high followed by lower high. So this is the highest point on the chart, and then we get to see the drop, and bounce creates a lower high and a new lower high, so which is bearish, and MACD histogram is also now negative. So I'm going to apply fib extension in the downward direction. So start from the highest and apply your first extension downwards. I need to change the color to red. So the first extension target to the downward direction was achieved, 3.97. Then we got the bounce, and now it's going to break and move to the next target of 3.36 to 3.49, or to round off we can say 3.5. So in short, when 10-year yields or long-term charts like US 30Y yields, they are moving lower, it's a sign of weakness and dollar gets bearish. So this supports gold's bullish run. Now I'll move to dollar index. So taken from 10-year chart, we know that dollar is going to remain bearish. I'm moving to monthly chart for dollar index, and this time I'm going to connect my extensions on candle. So my first extension in the bearish direction applied, A, B and C. So I've taken the previous high, low and the lower high, and I'll bring my vertical line on point C here. So vertical line applied, and I'm moving to the weekly frame, and on the weekly frame we need to look for the new cycle downward. So here we have A, we have lowest point B, and we have point C here. So we can use this for extension. So next fib extension in the downward direction applied on the weekly frame. So on the basis of fib extension, we have very strong resistance, fib level resistance at 100.37, and the next area of support is 94.40. So currently dollar index is at 97.14, and after breaking the fib support, it started here, it broke the support, it retested the area as a resistance, and now it's marching lower. So dollar index is expected to remain bearish. We'll move down to daily now, and on the daily frame, I'm going to apply my next extension in the downward direction. So next cycle bearish identified and extension applied, and we can see that we have a very strong confluence magnet support at 94.40 to 94.20. So in short, dollar is expected to be bearish. Now I've taken one dollar based currency pair here, USDCAD, and I'll start from monthly. So on the basis of monthly frame, I have identified the highest point of the monthly chart and I'm going to connect it with the lowest point. So on the basis of fib retracement, we need to check the percentage of pullback. And USDCAD bounced and stalled exactly at 78.63 times. So 78.6% is a very, very strong resistance level for USDCAD. I'm shifting to line chart, and on the basis of line chart, I have found bearish divergence between the two highs. So here we have higher high formation, and higher high formation comes with bearish divergence. So buyers exhausted and sellers were supposed to take over. I need to plot BOS level here. So the midpoint between the two diverging highs is our BOS level, which is not yet done. But alternatively, we can use trend line method here. So I'll start from the lowest. So lowest point identified, and I'll connect with the BOS. So let's draw the diagonal trend line here. And the trend line is not compromised. So currently, USDCAD has found support. Monthly chart has found support precisely on the trend line level. I need to plot a vertical line on the highest point and look for bearish cycles. So on the weekly frame, I need to look for bearish cycles here. So it started with the high, followed by lower high, and the next lower high. And the last two low points are formed with containing style bullish divergence. Now, containing style bullish divergence brings short-term relief rally, basically corrective bounce, and then continuation lower. So I'm going to apply fib retracement from the highest to the lowest. So it rallied in the upward direction and found support at 23.6. And the MACD environment is right now corrective, so under the bullish impact. I'll move to daily now, and on the daily frame, I have identified bearish divergence on the top, higher high formation with bearish divergence and a strong one. And the sellers, they have completed the breakout structure, and we have got these cycles downward. So first move down, corrective move up, followed by next move down, corrective move up, and it ends with bullish divergence at the bottom. Now, due to bullish divergence, I'm looking for short-term bullish impact. I need to apply breakup structure here for the buyers. So the breakup structure level is 1.3981, and alternatively, we can use a falling trend line. So we'll start from the highest and we'll pass the trend line from the BOS point. And yes, buyers have taken over, but I can see new sign of weakness in this bullish rally. So here, the last two highs, they have come with bearish divergence on the histogram, and again it's a containing style, so which means short-term pullback, and we might expect one more bounce and then drop downwards. So let's apply bullish extension in the corrective wave here. So we'll start from the lowest and I'll look for first bullish extension, but this is corrective. So we have first high and higher low extension applied. I need to use green here for the bullish wave, and it reached precisely to extension 200 and dropped. Right now it is facing resistance around 200 level, 1.3911, and the support is formed here. So we have two fib lines acting as magnet support here. Now let's move down to 4H, and on the 4 hourly frame I can see that we got a sharp move downwards with bearish divergence. The breakout structure is not yet done, so it could remain range bound until Fed's monetary announcement. And on the same day, we also have Bank of Canada coming with their rate of interest announcement. So both currencies would be highly impacted with the monetary news. And here, it might get to retest 1.3911 with new bearish divergence and a drop. Alternatively, if you see a bounce higher than 1.3911, then the next level would be, I need to look for new magnet here. Then the next magnet zone is around 1.4077. So any bounce towards 1.40 with bearish divergence to be taken as an invitation to sell, because dollar index remains under pressure, bearish pressure. Now the next instrument is WTI, that is crude oil. Now I'll start from the monthly frame here. On the basis of monthly frame, I'm going to connect fib retracement from the lowest to highest, and we'll connect the retracement here. And now it is creating a sequence of lower highs. So starting from the highest point, followed by the first low and lower high, and during the second move down, it has again started creating a sequence of lower highs. So crude oil on the monthly frame is under bearish pressure, and the environment on MACD is also bearish. Now I'll move down to weekly and look for bearish cycles. Basically, I need to apply bearish extensions here. So I'm starting from the highest point, which is again under bearish divergence here. And the sellers, they have completed the breakout structure. And I'm going to apply my first extension on the first major wave down. So here we have highest point, we have low point, first low, followed by lower high. So let's use it and apply fib extension in the downward direction. We can change the fib extension color to red here. And I'll bring my vertical line on point C and look for new waves downwards. So starting from the vertical line, I need to look for the waves in the bearish direction. So we have highest point here A, we have first low, and we have lower high. So I'm going to use it for the next extension downwards. So second extension in the bearish direction applied, and we need to shift the vertical line to point C. So I can see here that we have very strong magnet resistance. So we have two fib lines coming together. So zone of resistance is 66.91, and the nearest magnet support is around 55. So unless crude oil remains below 66.91, I'm looking for the next bearish target as $55 price, and we can look for new extensions further down. So starting from here, the next wave downwards identified and new extension applied here, and we can move the vertical line to the latest one. So we got a new high and a lower high here, so we can use this one as well for the next wave down. So we have multiple waves on the weekly frame. So now I get to see another magnet, and this one is around 73.74. And the next lower magnet is around 66.91, and the closest support magnet is now at 59.55. sorry, 57.55. So the first target in the downward direction is 57.55, and if I see 57.55 is being broken, then the next target is 55. And the environment on MACD histogram is bearish, negative. Let's move down to the daily chart now. Now here on the daily frame, I could see bullish divergence at the bottom, two lower lows with bullish divergence. Buyers completed the breakout structure. They pushed the price higher, but now it is again under bearish pressure because it is creating lower highs and lower lows. So we can use our daily chart for the next extension downwards. So first move down identified and extension applied. Let's change the color here. So the brown lines are representing our daily extension levels, and move the vertical line to point C here. So a round figure number around $60 mark is the first Fib support, followed by 57.55, and major resistance is now at 65, and a higher one with a very strong magnet is at 66.91. And the environment here is bearish based on MACD histogram. We can move to further lower chart, that is 4 hourly, and on the 4 hourly frame I can see that after dropping to 61.74, it created two highs, but the two highs are again formed with bearish divergence. So weakness spotted in the buyers, and sellers, they have completed the breakout structure and it has dropped below the BOS level, and now it is consolidating. So range bound behavior, and generally after consolidation, market continues in the higher time frame direction. So I'm expecting short-term range bound behavior, and once it breaks below 67.74, it will quickly move down to $60 mark and further down 57.55, and ultimate level is at 55. Let's look at the behavior on 1 hourly chart. And even on the 1 hourly frame, I can see that it is continuously creating a sequence of lower highs and lower highs. And here we have a low and a higher low. So basically, it has created a triangular pattern here. So we can use our falling trend line from the top, and from the bottom, we can have a rising trend line. So we need a break below the rising trend line or the horizontal level of 61.74, a Fib level support. And once it breaks below 61.74 with the successful retest, it will continue lower. And the environment is now turning bearish. So across all time frames, bearish plan is supported. And finally, our favorite instrument, gold. I'll start from monthly here, and this time I'm going to apply my extensions on the candle chart. So I'll start from the lowest point of 2015 here. So here we got the 2015 low. I'll use my first Fib extension, connecting the lowest candle of 2015, and I'll join it with the first high and higher low. So we got the first extension on the monthly frame. Yes. I'm just fine tuning the levels here. So 3670 is the Fib extension resistance here. So that is the reason that gold stalled near 3670. And I'm going to apply my first vertical line here on point C, and no more extensions to be applied on the monthly frame, and environment is strongly bullish here based on MACD histogram. Now we need to move down to the next lower time frame, that is weekly. Now on the weekly frame, I'll look for the next wave, bullish wave. So we'll start from point C, our vertical line will connect with first high and the higher low. So next Fib extension to be applied on the weekly frame. So second extension applied. and let's change the color to green here. So we can see duplication of Fib lines. So we have very strong resistance here around 3670 to 3699, or to round off, we can say 3700 mark. And we have super strong support zone at 3277. And we can look for the next cycle in the upward direction. So we'll start from point C. I need to bring my vertical line on point C. I'll shift the vertical line, beginning of the new cycle, and we'll look for the pullback here. So this is the pullback point and the high connected to this. So this is our second extension, second cycle on the weekly frame. So second extension identified and applied, and now I can see that we have a very strong magnet support at 3522. So 3522 is the nearest magnet support. And we have one more cycle in the bullish direction on the weekly frame, so let's use it. I need to zoom in and apply our extension on the next bullish cycle. We can shift the vertical line here to point C, and we will use it for next application. So our next extension applied. And now I can see a super strong magnet, resistance magnet in between 3700 to 3720. But the environment remains bullish. I can see MACD histogram rising and MACD lines are also rising here. And we can move our vertical line to the latest point C and shift to the next lower time frame. Vertical line applied, and now I'm moving to daily. Now on the daily frame, starting from the vertical line, we need a minor adjustment to bring it to the lowest candle, and we need to look for next cycle. So we have point A starting from the vertical point, vertical line. I'll connect it with the high and the higher low. So I'll be applying my first extension on the daily frame. So new extension applied on the daily frame. Let's change the color to blue here. So blue extension lines are representing daily chart, and shift the vertical line. And I can see here the scope to apply next extension. So point A, point B, and point C identified. Let's use them. So our next extension applied. And currently I can see that gold is exactly on the Fib resistance here. So 3655 to 3670 is acting as resistance. And the closest support is now 3581. So I'll use a horizontal line to highlight the closest support. And the magnet support is at 3510 to 3518. Now let's move down to 4-hourly chart. We need to shift the vertical line to the latest point C and look for the new cycles on the 4-hourly chart. I do not see any sign against on the daily frame. It is continuously creating a sequence of higher highs on MACD and price. It means no divergence, we have convergence here. So I'm shifting to 4H. And on the 4-hourly frame, starting from the vertical line, we can apply a new cycle here. So we have A, we have point B, and the pullback low, higher low, point C. So I'm going to use my first extension on the 4-hourly frame. New extension applied. Let's change the color to purple here. So purple lines are representing our 4-hourly chart, and move the vertical line to point C. Now we have two probabilities. So on Monday, when the market would reopen, either it can retest 3583 and then move higher towards 3700 to 3720, or it may continue moving higher, and prior to Fed announcement, that is on 17th of September, it can complete the high at 3700 to 3720 with a temporary bearish divergence on the lower time frame. And then after the monetary announcement, rate of interest announcement, we can expect a temporary drop towards 3583. A deeper retest would be at 3541, 3510, and ultimate support is around 3447 to 3462. Now, if you see a pullback, that would be temporary, and take the opportunity if you get to see discount coming in the market. Now, take the opportunity and add your long positions for the new targets higher than 3720 or 25. So 3720, 25 is the nearest resistance, and followed by 3774, 3803. And in the coming weeks or months, I see super bullish cycle for gold to continue, and our ultimate target would be 4,000 mark. Now, because of 10-year yields dropping down, dollar would remain under pressure, and this is favorable setup for gold. I hope my today's video was helpful. If you like my content, give me a thumbs up, subscribe to my channel, stay sharp and trade smart. I'll see you next week.